US markets are flat as weaker new home sales indicate falling demand. FOMC members debate patience versus a July rate cut. Australia's May inflation is weaker than expected. Japan's services inflation pressure builds and New Zealand's exports jump. That's coming up in our 5 Things in 5 Minutes on Thursday, June the 26th. Then in our deep dive interview, ANZ Economist Krystal Tan reviews how the latest domestic political uncertainty in Thailand and a process to find a new central bank governor could impact the Bank of Thailand's policy path.
If political instability escalates and fiscal policy stalls, Bank of Thailand may need to do even more. Thailand is once again facing political turbulence.
But first in 5 and 5 with ANZ, I'm Alex Tarrant in for Bernard Hickey. The S&P 500 was flat while oil rose about 1.5% as markets took a relative breather overnight. The main economic data was for US new home sales in May. They fell over 13%, but that followed a 10% lift in April. ANZ head of G3 Economics, Brian Martin, says on a trend basis, the US housing market is slowing down.
We saw that in existing home sales. We've seen that in surveys of the building sector, and we're now seeing it in new home sales as well. The reason for that is because uncertainty is running high in the United States at the moment. Uncertainty about tariffs, uncertainty about the path of government spending are all playing into weaker levels of consumer confidence. And consumers are more cautious about making investments in large ticket purchases at the moment, and the housing market data is reflecting that.
At 4 a.m. Sydney-Melbourne time, the S&P 500 was trading down 0.08%. The 10-year US Treasury yield was up 1.1 basis points at 4.301%. Gold was up 0.21% at $3,341 an ounce. West Texas Intermediate futures were up 1.54% at $65.36 a barrel. The US dollar index was down 0.16%. The Aussie dollar was up 0.02% at 65.03 US cents, while the Kiwi was up 0.4% at 60.30 US cents. Number 2, Brian says demand in the US economy is softening in response to uncertainty, which may push back against the tariff effect on prices. ANZ research is picking the FOMC to start easing again from September.
Many on the FOMC still remain cautious. And FOMC's Collins said overnight that a period of patience with regards to interest rates is what's required, that the wait-and-see approach is the appropriate way to move going forward. So there's many people on the FOMC, as we know from the dot plot, who think that no rate cuts this year or only a very modest easing later in this year is what's going to be appropriate. And that typically gels closely with what Chair Powell has been guiding. We do know, however, that 2 very senior members of the FOMC on the Board of Governors, Chris Waller and Michelle Bowman, both favour a July rate cut. So there's obviously a debate going on about monetary policy strategy and the best way to implement that at present.
Number 3, Australia's May CPI indicator showed an annual rate of 2.1%, below market expectations, and down from 2.4% in April. The trimmed mean indicator fell from 2.8 to 2.4%, its lowest since November 2021. ANZ senior economist Adelaide Timbrell says the numbers present some downside risk to ANZ Research's Q2 CPI forecast of 0.8%.
While global risks do mean potentially lower global growth, which is generally disinflationary, there's also two-sided inflation risk from the global backdrop, including a lower AUD path, as well as a little bit of potential for modest supply chain disruptions with container prices up since May. So there are a lot of moving parts in inflation in the coming quarters. At this stage, disinflation does seem to be winning in the last couple of prints, and certainly that cautious consumer that we saw reflected in the latest spending data will also keep any inflationary risks on the demand side from manifesting in the near term.
Number 4, a summary of the Bank of Japan's June meeting indicates board members want time to assess the impact of tariffs, says ANZ international economist Tom Kenny. Meanwhile, a stronger than expected May services PPI at 3.3% yesterday counters views from policymakers that inflation risks were skewed to the downside.
This measure of services inflation has been running at over 3% since September last year, the longest stretch we've seen since the early 90s. And this was a period of sustained 2% underlying CPI inflation. We believe we will get greater clarity on the tariff situation in coming months, and we aren't expecting a meaningful impact on the Japanese economy. We maintain our view that the Bank of Japan will hike by 25 basis points in October and then again by 25 basis points in April next year, taking the nominal policy rate to 1%.
Number 5. New Zealand's annual merchandise trade deficit was just $3.8 billion in May, an improvement of $1.2 billion from April, as exports rose 9.7% and imports fell. ANZ economist Miles Workman says strong export prices, good growing conditions, and a lower Kiwi dollar have all helped.
When we think about the goods balance going forward, you've got the likelihood that the exports growth that we're seeing is unlikely to be sustained. But at the same time, we've got this pickup in domestic demand that we're forecasting as the domestic economy continues to respond to easier monetary conditions. And that's going to suck in a bunch of imports. So essentially, we're probably going to see the annual trade deficit continue to narrow for the rest of 2025. But when we get into 2026, we're probably going to see it turn a corner and start to widen again.
Miles Workman there. Now in our deep dive interview, ANZ Economist Krystal Tan reviews the Bank of Thailand's latest policy decision, and that was made against a backdrop of rising domestic political uncertainty and a process to find the next central bank governor.
The Bank of Thailand has hit the pause button after 2 consecutive rate cuts. The decision was in line with expectations. While the Bank of Thailand acknowledged rising growth risks, it also pointed out that earlier cuts have already provided some cushion. And now with the policy rate already low at just 1.75%, the Bank of Thailand wants to preserve policy space and be deliberate about its next move, especially given the heightened uncertainty surrounding the growth outlook. Having said that, the Bank of Thailand acknowledged the need for an accommodative policy stance. It signaled a readiness to adjust the policy rate in response to shifts in the economic outlook and emerging risks. So from our perspective, the case for further easing remains strong. We're seeing persistent economic softness, negative credit growth, and very subdued inflation. So our base case is still for 2 more 25 basis point rate cuts this year, bringing the policy rate down to 1.25%.
And there's some renewed political uncertainty in Thailand. So what could we see from this, and how might that affect monetary policy?
If political instability escalates and fiscal policy stalls, Bank of Thailand may need to do even more. Thailand is once again facing political turbulence. A leaked call involving the Thai Prime Minister and the Cambodian Senate President has triggered backlash and renewed domestic political uncertainty in Thailand. The Thai Prime Minister is now facing legal challenges and calls to resign. Now, the situation still remains fluid. There are several possible outcomes, from the Prime Minister staying on, to resignation, to suspension, or even a snap election. So the key watch point is the Constitutional Court's meeting on the 1st of July. This is when it could review a petition calling for the Prime Minister's removal.
So what sort of risks to growth are there from this instability?
Heightened political uncertainty is threatening to complicate the implementation of key economic policies at a time when the economic landscape is already very fragile. So a key concern is if the budget for the fiscal year starting this October would be disrupted. Such an outcome would weigh heavily on growth and also increase the pressure on the central bank to do the heavy lifting to support growth.
And now there's also an upcoming leadership change at the Bank of Thailand. Could that influence the rate path from here?
The selection process for the next governor is in its final stages. 2 candidates are reportedly in the running, a current Bank of Thailand deputy governor and the president of the government savings bank. Now, the former is seen as the continuity candidate, whereas the latter is more likely to challenge the status quo. Now, he has been relatively more vocal on the need for lower rates and broader credit access. Now, so depending on who's appointed, market expectations around the policy path could shift, especially if an external candidate takes the helm.
Krystal Tan there. I'm Alex Tarrant in for Bernard Hickey. That was 5 and 5 with ANZ for Thursday, June the 26th. Catch you tomorrow with a look at how Australia's job market is performing.
This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.